Good afternoon, traders. Welcome to my weekly update, which hopefully I would do on a weekly basis, but I've missed a couple because I was on vacation. I'm back, so hopefully at least once a week on the Fridays or on the Mondays, I will be able to do it. Thank you for coming. We have a very good turnout so far. Hopefully we get more people in the room. More people are joining, so eventually some people are saying Monday may be better. Well, the week is finished, but you still get to know from now to Monday nothing will change. So if I do it now, you have enough chance to go and do your own homework during the weekend and match it with what I have. That gives you 2 days to look at your analysis and my analysis and make a decision. If I do it on Monday, you're not left with much time to do that. We've got some greetings from Mexico. Good to know we have a lot of Mexicans in here. I think we have people from all over the world here, so pretty much I can tell you my traders alone are from around the world. We have people all the way from Canada to New Zealand. Yep. I'm pretty sure we have at least about 30, 40 countries in here. Absolutely sure about that. Yes, it will be uploaded in YouTube. Okay, Kosovo. I haven't seen anybody from Kosovo in as yet. Maybe you guys were in, but we never asked. The list of countries is pretty long. We're definitely going to cover 40. You're the only one from Kosovo. Could be. By the way, we have a new student who joined also from South Africa. I think it's our first student or second student from South Africa. I'll have to check, but we don't have a lot from South Africa, that's for sure. We do have a lot from Singapore, from Australia, from, well, I'm not going to label the US or the European countries. Most of our students are still from the US. Yeah, we have students from Pakistan, that's for sure. Zaib, you're in my group. You're asking if we have students from Pakistan. You're in the group, yeah.
Anil?
Yes.
Benny and Mark are also here?
Oh, let me see. You can't add them?
I can't, no.
Oh, okay. Let me see if I can find Benny very fast. Okay, got Benny. Let's see if I can find Mark. Yep, got him. Sherry's not in the room, right? Yep,
I didn't see her yet, no.
Yep, people are still coming in by numbers. We started with 140, we're 160. I think we should have over 200 people in the room. That's normal. Hopefully we get 300. By the way, there is news coming out in about an hour time. Yellen will be speaking, but that shouldn't affect what we are looking at. Just like the New Zealand, we said it's going to go up and it went up. Pretty much you can see that. Well, now New Zealand, be careful for my traders, it could reverse. We have already analyzed this and there is a chance it could go higher, but at this point, once you see that blue line there, for us, for those who are not from my group, when you see that blue line there, that's a point from where they could start to reverse. I don't think you should be trading right now until Yellen's finished speaking, and it's Friday afternoon, so there could be spikes that will take you in and take you out very fast. So, okay, guys, what I will ask everybody to do is don't use the question, don't use the Q&A, use the chat, because the Q&A, only I get to see it. Cheers from Spain. Yeah, somebody said they're from Spain, and that's good. Use the chat. Everybody use the chat. Don't use the Q&A, because when you send the Q&A, only I see it and my panelists see it, right? Panelists are those very good traders in our room who are helping with the training session, right? We'll go, Yang. Don't worry so much. We are going. We just need. Oh, you're in the trade. You wanted to go. I see. You're in the New Zealand. You wanted to go. It will go for you. Don't worry. So, yep. I think we'll start now. Let's say 2 more minutes, and then we'll start. There's no rush because you wouldn't be really taking a trade. We'll analyze some charts and details. We'll look at long-term, short-term, both for you guys, especially all the majors. We'll go through all the time frames so that you guys have a great idea what it's doing. You're in the Pong long, you should move at least move your stops to positive. Some of my traders are in the Pong long too. I think the Pong could go both ways right now. Aussie is going up, Australia and New Zealand going up. On the downside, the yen came down. I had the yen there for you guys when I opened. The yen came down, but it's not a sell yet. You see it's bouncing there, so you're going to be careful. Patterns like these could go both ways right now. This one could go up. Oh, sorry, let me just get back to that. Yeah, this one as it is here now, it could go up some more. But if it goes up some more, it will still be correction for downside. That would not change the bigger picture, excuse me. That would not change the bigger picture. You bought the Aussie New Zealand break. Let's see, you bought it. That breakout. Oh, you got to be careful with it. It's looking, yeah. If you bought this breakout, keep your stop very tight here. There's a chance that this could go both ways. See, we have both lines there. That means there's a chance it could go both ways. For my traders, most of them would have taken a break-even trade already, right? But here's where you can re-enter. If you took the break-even trade, you can re-enter in the break of this one. That may confirm the move. I would not be surprised if the New Zealand suddenly starts to go down faster than the Aussie, right? But this is not looking very impulsive right now, not very aggressive, but it could still go, right? Just keep that in mind. Okay, let's start. I think we have about 174 people in the room. That's okay. Let's start. So I'll not go very fast for the first couple minutes because I'll be going through in details and different time frames all the let me just make the daily available because we'll be using it pretty often. We'll be going through in details all these majors because we trade them, and for the week ahead it's good to do that. So if you've been following this chart, and I think most of you in here have been to my webinars and we've been following, and we were expecting this up move, nothing new here, but we were expecting it to probably be an impulsive move to the upside, which means we were thinking it would be something like this going up. But as you can see, and I think a lot of you have learned from this, what impulse and corrections are right now. Not only those of you who come to my webinars, but some of the top traders in TradingView have stopped using advanced patterns. I am pretty happy about it, that they've stopped using that and they're looking at impulses and correction now. That's good. Finally, some people are learning. I am glad. We're all open mind to learn. So when I see people do the right thing, I'm always happy about it, right? So this is not looking very impulsive right now. And that means if you look at a structure like this, the possibility of this structure is one more up and then it will make a downside, right? There's a 90% chance we will get more downside on this. Rarely you will find that this structure is going to change, and it will change only in one case, if it is a leading diagonal to the upside. Now, I don't want to bore you guys with all those technical terms and structure and all of that. I'll just tell you what I mean by that. 1, 2, 3, 4, 5. And if this is the first wave up, we will have a correction down and then continuation. So it doesn't matter what this is right now. For you, what is matters, when it comes here, it is going to make a downside. The downside will break the structure. And then if it is an impulse, it is going to continue to go further down. If it is a corrective structure, I will update that for you because this is a weekly chart. This will take a couple months. It will go up. So you have enough time for me to tell you. But for now, what you need to focus on is this piece here. This piece has both possibilities, and it could go both up and down, because when you're looking at corrective structures, they could either be 1, 2, 3 waves, 4, 5. They could be 5 waves. And when I said 5 waves, I'm talking about 5 corrective waves. We're not going to get the details again of that. Don't question what I say. Please don't go. Some people try to question the wave count. I know what I'm saying when I said it's a 5-wave corrective structure. That's not something of discussion we're going to go into. That's just the fact. It could be a 5-wave corrective structure, a WXYXZ pattern, or it could be an ABC, and that means it's going to come down right now. So you're at a point where next week we can get a very good trade, right? Which means next week we would watch to see whether the dollar index breaks to the upside. That's a very good trade to the upside, or if it breaks to the downside, and that is an amazing trade to the downside, right? Both ways possible, and both ways are very good trades with lots of pips in them. which means you will have very good trades on the majors, the other majors, and that is the euro. Let's look at the daily and the euro. The euro right now in the weekly is still in this very, very big consolidation. And if you've been in my webinars previously, you'd hear me say that this thing is not ending so fast. Time-wise, it has to go quite a lot more. Time-wise, we were expecting at least a couple months more in here before we even think of changing direction. So bring it to the daily, and we are in this pattern here, this structure. And as you may have seen, a lot of traders were picking tops and bottoms and focusing where it's going to go, and all kind of patterns. Actually, all you have to do is look at the structure. And the structure actually tells you the story, what it is going to do. That is so simple. Right? It is not about the lines I have on the chart. I have to repeat this so many times today because suddenly I've seen so much wave traders with their name waves in it coming up on TradingView that it scares me. It scares me that this wave trading will become, if you look at all of them and what they are doing, they will just spoil something that is good. Because people would want to think that these guys are professional wave traders and they have very little clue of what they're doing, because I monitor a lot of their charts. It's not about putting a lot of lines in your chart and hope that it breaks this line, it's going to go. Those lines don't come there by magic. I don't just put them there. The lines are actually showing you the structure we're anticipating to see in the future. What structure we think this thing is making, and that is based on a lot of other rules we have. So people just putting a lot of wave next to their names and doing that fancy thing may mislead the entire community into believing that if you do a lot of crazy things with something good, you eventually think it's not good, right? Wave trading, you have to understand the wave theory much more than the lines themselves. They have little value, right? So I don't want that whole concept to be spoiled by people just putting waves next to their name. I would appreciate if they don't put waves to their name, just put your name and put your strategy you're using and let people decide, right? Because new traders tend to look at that and say, oh, well, this guy is a wave expert, that guy is a wave trader, that guy has the, is a wave specialist and all of that. And in reality, it's very far from that. So what we were looking for here was if it's going to consolidate into a corrective structure that we know, or is it going to make an impulse? And immediately you can see I gave you two versions, and the one version is it start to consolidate. For me, this is a consolidation. And just like the dollar index, dollar index could go up within this level of consolidation. We're in the 4 hour. If you go on the daily, that's just a consolidation. Within this consolidation, we're looking for actually mostly upside. So this is telling us a story of upside, which means the dollar index may likely fall. Remember, the dollar index is a result of the trading of the majors, right? It's not the dollar index that moves the euro. It is the euro that moves the dollar index, right? It is the euro, the Aussie, the New Zealand, their relationship to the dollar that moves the dollar index, and not the other way around. It's not because the dollar index goes up, then euro goes up. It's euro, the sales of euro, the relationship of euro to dollar is what will move the dollar index, right? So I would look at the euro first and then decide, well, okay, dollar index. But if I see a pattern in dollar index and I don't see a pattern in euro, that helps me to tell where the euro is going to go in the future, right? That is why we're looking for patterns as always. And this pattern is telling me very high probability of an upside trade. Even if this comes down, and we think it could come down for one more, we may be looking at a 1, 2, 3, 4, 5 wave pattern. It looks very much upside. And the only time I'm going to go for a downside trade, for my traders, actually, I really don't want to say this now because we have an hour, 45 minutes before Yellen speaks. The downside trade, if we take this downside trade, it could be short-lived, right? This is looking downside right now. It's climbing up there, and there is a down trade here, very possible. It may be very short-lived. So if you do get in a trade like that, you got to be careful. For me to change the view to the downside, we have to come back right into this channel. It has to break this structure back into this channel and make a correction up before I decide we're going down. Otherwise to that, it is showing me a structure that is building to go up. So this structure does have more downside in it. Nobody says that within the range of this structure, we can go down. We can do as much as this as we want before we go up. These are what we call complex structures. A simple structure is a three-wave structure. Here is a simple one. 1, 2, 3. That's a simple structure. These become more complex, and they could develop into double trees, triple trees, and all of that. If you're a wave trader and you know what I'm saying, they can become very complex. So it's not, again, about just putting a line and say, well, you sell here, because if you sell here, you can lose that trade. And you can lose that trade because it could come down pretty fast and go back pretty fast. Unless you're very, very good at trader and you know what you're doing, then you may be able to get a break-even trade out of that, right? A lot of traders lose trades like that because they don't have a clue what they're doing. So it may be a sell. Be very careful. If you're very good, like some of my traders who are very senior, I said you can take the sell. Just make sure in the worst case scenario, you get a break-even trade. They know what I mean by that. They know how we move stops, how we do all of that, because we have strategies that helps us to do all of that, right? So I wouldn't say trade this until after Yellen speaks. Even if it goes, sometime you know the direction it's going to go, let it go. You don't have a strategy to trade it. You don't have a setup to trade it. You're not sure how it's going to go. Then you just let it go. Trading is not about catching all the moves. Actually, trading is not even about catching a lot of pips. And I will actually, at the end of if you stay on to the end of the webinar, I'll show you how you can make less pips and more money, rather than a lot of pips and a little money. I'll show you that. It's something I see a lot of traders are confused about, but I'll show you how it's done. It's all risk to reward ratio and not the size of the pips you're making. So we were anticipating upside. What we will do is monitor this structure. That is why I said if you're going to take the buy, wait for this structure to break. If you're a newbie, if you have experience, you could be in this trade from here, but then you would have to have a break-even trade. Right now, some of my traders are in, and they will be going for a break-even trade because they have it at +1. That means 1 pip above the spread. Above your entry and above the spread, 1 pip above that. If it takes you out, let it take you out. You're not going for this. This is not the trade we're looking for. We don't look for a 20 pip trade or a 10 pip trade or a 15 pip trade. That's for the people who are hyping. We're not in hype. We're looking for traders go 5 to 1, 6 to 1, and probably more. That is what will build your account, right? Goal is going crazy. We'll look at it just now. Don't worry. We're going to come to it. Pong. If you look at the Pong, this one is amazing. And this one shows you how structure works, how we can predict what this thing is going to do. And the reason we can predict what it's going to do actually in the future is because we're predicting a very concrete structure that we know. And this is why you can watch it and you can be amazed of how it goes down, turn, and goes back up. Now, we will not be exactly at the spot where my arrows are, because the arrows are not a case of where it's going to stop. The arrows are a sense of the direction it's going to go. Because some people sometimes write, oh, I think it's going to go to this level and turn. I said, no. That's just giving you a sense of direction. It's not giving you the exact spot where it's going to stop. This is not a target. It's telling you when it breaks, it is going to go up. Right? It's just giving you a sense of direction of where it's going. So it came down and then up. Now it's in this pattern, and we all know what that pattern is. You can look at it. This pattern still has a probability of coming down once more and then going back. Remember, I told you guys corrective structures could be 1, 2, 3, 1, 2, 3, 4, 5. They could be 3 waves or 5 waves. So we're looking for either a 5-wave or a 3-wave correction. In this case, the possibility for a 5-wave correction still exists. Not that it will happen, it exists. So what you're going to wait for, confirmation of a break above here before you buy, or confirmation of a break below here before you sell, right? That would likely happen next week. Maybe when Yellen starts to speak, it's going to take off very fast in one direction. You don't have to chase it. Remember, if it moves 100 pip right now, it will pull back 50 pip next week. And then you have confirmation that it is going to go a next 100 pip. That is a good trade, or at least 50 pip back to the top. So you're going to have a very good risk to reward trade if you wait for that rather than chase the one that is moving immediately when you don't have a clear view where it's going to stop and when it's going to turn, right? So wait for these trades and you may get very nice trades out of them. Aussie, very similar. They're all in that similar structure where they could go both ways. We're in this structure here. And this structure could go both ways. It could go back to the top there, and then come down, or it could break this structure here and go down. If you ask me, the way it is shaping right now, we don't have enough confirmation of that as yet, but the way it's shaping right now, I'm more inclined to say downside. I'm more inclined to say it's going to reverse from there, or it's probably going to settle here some more and then go down, right? We don't have enough. We just have 3 waves within the structure to tell us. 1, 2, 3, and this is not the top of any wave as yet. It's never the top. You don't know where the top is until you have a bottom. So we can't make a prediction of this going down, but the bigger picture of this, which I want you guys to focus on, is showing us a sign that it will go down. We've been looking for this downside for a while now. Some of you know, downtrend, still corrective structure. It comes here, it will still be a downtrend. This still has a higher probability of coming down to retest this low. So this is the trade you really don't want to miss. There's a 95% chance this trade will do that. Structures like these rarely change. They change, they could change, but they rarely do that. You may find a 5%. Let's say if we had a 10% sometime back, now we have a 5% chance this structure will change from anything but a downside structure, right? So as this structure is, and as the way we're looking at it, and everything we see in the chart is telling us the probability of this going down has increased. So we will be looking for a sell setup. And you should look for the sell setup. When we see the sell setup in the 4-hour or in the 1-hour, I will post that trade for you. So if you're buying this one, you got to be really careful. If you bought here, make sure you get it to positive, because nobody says Yellen speaks, this doesn't take off to the downside. And it could go pretty fast. Now, I'll give you one clue what you can do. I'm not making a trade call. Let me make this very clear to everybody. I'm just giving you an indication what you can do if you don't want to miss it, and it's going to go pretty fast, which I doubt it's going to do. You put an entry order here, and when it takes you, and you put a stop above the top. Now, that's just a very small indication of what you can do. Now, you cannot do that every time there's a news event. Remember, that's not a strategy that you can use like that. It's a very specific strategy, and we rarely use it. But right now on the Aussie, it's possible, right? If you look at what the Aussie is behaving, that possibility exists for that strategy. Now, you don't know the strategy if you're not my student. So don't go about saying I used your strategy and it didn't work, because you don't know all the rules of the strategy. As one person was checking my charts and telling me my wave count is not correct, and I look at the chart and there was no wave count on it, right? So please don't make assumption of what I'm doing. Just look at what I gave you, right? Don't make assumptions of what is it. So you can only use this now, today, on that one. It's possible. If they're going to go down pretty fast, it's a good one. To the upside, ignore it. There isn't a strategy for buying to the upside, right? But trading this to the downside, if it starts to go pretty hard, that could work. New Zealand would pretty much be the same thing, but New Zealand, we will not use the strategy. I wouldn't tell you why, but we will not use that strategy in New Zealand as it is right now. New Zealand actually looks more upside as it is right now. So we'll watch it. It could come down. As I said, if it breaks this line, it's going to go down. If they stay there, it may be a buy. We don't know which direction it's going to go, but to the upside, I'm not interested. It's short-lived. I'm very much interested in this trade to the downside. And I've been for the longest while. I've made about 4 attempts selling this, and I've given up. If you were in my webinar once, we sold it. As some of you may remember, we sold this one. Let me see if I can find it. We actually sold it in the webinar itself, and we made some pips. I think was this one somewhere here. We sold the top here. You guys would remember it in one of my webinars. We did it live. We sold this breakout or something somewhere here. We sold, I think it was the breakout at the top here. This breakout here we sold. Turned out to be a very good trade. You made profit out of that. A lot of people did. I got a break even. Break even for me was like, I think about 10 or 15 pips. It went quite a lot, and I took the 10 or 15 pips because it didn't go. We made a second attempt at selling this one, which we didn't work out also, give us break even. So we will sell it again. For me, I will sell this again when I see the setup that I'm looking for a sell. And this trade is a big trade because all of this is a weekly correction you're looking at. You're looking at a weekly corrective structure. And when you get a structure like that, this is what you're looking for. Let me just give you an idea what we'll be looking for. You're looking for a move like this. You're looking for 1,500 plus pips. So This was a weekly corrective structure. This was a monthly structure. This is just a part of that corrective structure. The entire structure is here. If you remember it, I don't know how many of you remember. This was the entire structure. 1, 2, 3, 4, 5. Remember I said corrective structures could be 3 or 5. This was a 5-wave corrective structure, which we sold. So you can get about 1,005. So if you look at this, we'll be looking for pretty much the same thing here. We'd be looking for 1,000 to break this low. So that's about 1,100. I think we could go an extra couple hundred below the low. So we'll be looking for 1,000 plus pips on that trade. And the risk would be maximum, I think, about 6 to 70 pips. Maybe less, depends on where we get in and how we get in, right? But that would be the risk to reward of that trade. And we will not get out of it. We will just be adding more trades onto it. Right? Once we get in a trade like that and the first trade goes and you can get the first trade to positive, the next thing we do is add more trades rather than taking it off. Right? If you guys save the chat for later, would be great, because I am not reading the chat as I'm doing the webinar. Right? When I finish, I would leave enough time for our question Q&A, because it's Friday afternoon. We have enough time for that. So watch this trade, the upside a little more, and then it's probably going to start to reverse. So I'm hoping that next week we can get this big trade to start, because if it starts next week, it would be good for most of you to see how we do this. We have done this a number of times. Some of you have not seen it, some of you have seen, but we will follow it step by step as it goes, right? So you can see how we do it. US Chief, it's in this big sideways move. Eventually this will go up. Eventually it's going to go up. This piece is what we're looking at. We don't have enough information on the structure itself to decide whether it's going up from here or whether they will make an attempt more here before they go back. So we're just leaving it until it forms, and then if you're trading 15 minutes, they're trading it. But if you're looking for long-term trades, if you're looking for a very short-term trade, which may happen next week, look for this trade above here to this level, or this trade to break this level, right? You will have the charts, you'll have the recording, so you can spend the weekend looking at what I'm talking about. This level here or this level, those are the two levels you would look at first, and then we will see where it goes. By then, I'll give you an update on the chart, what it's doing. US CAD, put that in the daily. Put this on the weekly, because this one is here. It's on the weekly. You can see this is an interesting one. You can see that we have made a very sharp impulse, a very, very sharp impulse, and we are making a corrective structure. So the next big thing to happen here would be an impulse to the downside, but this will not happen. I mean, not within the next 3-4 months, probably. If you know anything about correction, this correction will happen in the next 2-3 months. And if you do know anything about correction, we only have one impulse in this. We're in a corrective phase, and we should have one more impulse up. So we would look for one more impulse up here, and then we would look for this big trade to the downside. That one is going to be a very big trade, right? So we were looking for this to come down for a while back. We have broken a weekly structure, so that you can see. We've broken out of a weekly structure. This is a weekly uptrend we broke, right? This had by itself an impulse up, a corrective structure, and a very huge impulse up. So this could come back pretty much deep, and you're talking about a very, very big trade there to come. And when that comes, it is going to come pretty fast. If you don't know what you're doing, and if you don't get in time, you're going to miss it all. Because when impulses move, they move very fast. When they broke this structure, you see what happened? They went pretty fast. When they broke that structure, they went pretty fast. And this was a long correction. See that? That was a very long correction. If you look at all the corrective structures they make, they spend months making them. Months doing this. This is a weekly chart. These are months going sideways, and then they drop. And then they drop. They went sideways here for a while, and then they took off. So if you don't know how to trade these structures, if you don't, and you can't figure out where you're in a correction or whether you're in an impulse, you're going to miss most of the very good trades. Once you figure out you're in impulse and you have a very clear idea whether this impulse is about to finish, you're going to make some amazing trades, because you're not going to miss the next impulse going down. Right? It's going to be very tough for that to happen. So we're waiting for this to finish. I still think it has some more upside in it. right? We just can't figure out what the B wave is. Is it the running flat? Is it going to be an expanding flat? But it's going to be one of the running or expanding flat, which means it comes down some more, break the low, and then go back up, or it's just going to go up from right where it is. Once we get the entire corrective structure out of the way, we will be selling from the top. If this goes back here, we'll be selling from the top coming down, not from the bottom here, but from the top here coming down. Right? We will figure a way to find that turn in a lower time frame. Yen is in this big weekly corrective structure, as you can see, right? So as you can see this, I actually was doing this because I made a comment on a chart showing what the triangle actually looks like and the direction triangle goes. I rarely comment on people's chart, but when I see something that is absolutely wrong, absolutely incorrect, and it has to do anything with Elliott wave or wave structure, I'm tempted to make a comment sometimes. Because, you know, I think if you're going to put something out on an open platform, you may as well. It's not whether your trade is correct or your trade is incorrect. I would avoid you guys putting people's name in here. We don't want to discuss people. We are discussing patterns. We are discussing ideas. Put it that way. We are discussing ideas, not people. So what I'm talking about is the idea of what is a structure. So thank you for that. And sorry if the person is in, sorry for seeing your name there. That's not the point. Yep. So the idea, when I see something that is totally incorrect, the idea is that if you're putting it out there, you may as well get it at least a little correct. So these are corrective structures by nature. So if you see one, it should be a continuation process. That was all. I was just trying to make sure to set that correct, because I do respect the trader and I think he knows what he's doing, except he probably just got that one wrong, right? So we're looking at this structure, and this is the deep correction, right? If you look at this very deep correction going down, we have had a big impulse going up, and we're getting a very deep correction coming down here. Now, this may be all the correction, or it may have another wave up, another wave down, and then it's going to go up. I think this is likely what we're going to see. We're going to see a deeper correction up here very soon, one more wave down, and then up. That will complete the entire structure, right? So as it is right now, for a trade to the downside, I'd be very, very careful. We have divergence in the chart. This thing is not going anywhere. There may be one more short trade to the downside, very possible. They could break it, make a short trade, and then turn back up. Or we're going to have a deeper consolidation here, drop, break the bottom, and go back up. That blue line means when they break that blue line, you're always going to be careful. So I don't like to take trades when the blue line is very close to where the impulse is going to happen. But this one, we'll take it. There's still a couple hundred pips, I think, in this trade. Let me see. Yes, about 100 something, 200 to break the bottom. So we will take the trade. And the risk to reward should be about 3 to 1, 4 to 1. Yep. Euro Oz. Euro Oz has been making some very funny moves in this corrective structure right now. As you can see, we have had an ABC up, and we were anticipating probably a small correction and one more up for ABCDE as some kind of a leading diagonal. That is not happening. This is making a correction. There's no question about that. The question is the correction for the upside or is the correction for the downside? And right now, if you know anything about structure, we don't have enough clue that it's doing either. Right? We're still within the correction zone. If you figure out what I'm saying, we're still within the correction. It is still within this whole sideways move. So we're still correcting this whole thing, right? Sometimes, very soon, it will tell us what it's doing, and we will have a trade setup. I'm not posting anything at this as yet, because the first breakout we took didn't go well. And after that, the structure has changed a little. And it is a small trade in here. It's not like these big breakout, right? So the risk to reward there was amazing. If it had gone, it didn't go. I still think this looks very much upside. One more upside, this piece here. It's coming down still. That means we're making a much bigger corrective structure. As it is right now, the correction is getting bigger. What I'll be looking for is what technically you guys are going to call a head and shoulder pattern. What I call them is an impulse, a correction, and an impulse. An impulse, a correction, and an impulse. Right? That is what creates head and shoulder pattern. right? So the head and shoulder pattern come from a reversal impulse. This was an impulse down, and this is a reversal impulse. It will make a correction, and then it's going to make a next impulse. This is your trade. Now, you don't have to wait for it to break the neckline because that would be too late. We will buy it somewhere at the bottom here, right? On the first sign that it is going up, we're going to buy there. So keep an eye on this. I think that is what this is doing. There's a rare chance that this whole thing is a big correction. If that is the case, we will not get a trade. We'll just wait, right? You were in New Zealand. Look at this. Also in a big sideways move. Stay out of this. We've been staying out of it for a while. So Euro Yen, I'll do the Euro Yen more. And Euro Yen is an interesting one. It's a if you see there's something there, this is something I was showing my traders. A trade you can take, right? I don't think I want to, I will just show you very short. I don't want to go into very deep explanation as to why we are looking for that trade. But here's what I can tell you. If you, it's in a big sideways move, right? What technical traders call range trading. But if you know anything about range trading, you know sometimes they break out and then come back in. Sometimes they don't even reach the bottom. And that is because you're looking at different types of structure. Some structure are expanding, some structures are contracting. It depends on the type of structure you're looking at. You may have it either breaking out or you may have it not breaking. And in some cases, break out, what they say, technical traders say, well, we had a head fake. Well, I always say there's nothing fake in the chart. There is nothing false in the chart. The chart is a chart. It's just telling you, it's just data telling you what happened, right? What I think this one will do is we think it's going to probably make a move up here. It should not break the top. If it breaks the top, it negates the structure we're looking at. So let me explain this. It could go both ways. It could go above or it could not reach the top and go down. We're playing, this trade is playing with the fact that it might not reach the top and then go down. In that case, if it makes that structure, if it doesn't reach this top, if it doesn't break this top and then go down, we will sell here with a stop just above here. A very small risk. And by small risk, I don't mean pip size, I mean percentage on your account should not be more than 0.5% on your account. And then we will watch it come to this level. That will give you about a 5-to-1 risk to reward. That will give you about, if you put 0.5, that's 2.5% on your account. That's what we're talking about. If you lose 0.5 and you would care less about it. That wouldn't even bother you from sleeping, right? If you put too high a percentage and you lose it, you will probably not sleep for the night, right? So because we think it may make that pattern, we're playing with that, but this is a very high risk trade because we are not waiting for confirmation here. We are making an assumption that it will make that pattern. If it doesn't make that pattern, what it's going to do is going to break out for an A, B, C wave structure, and then we would wait for the break of the C wave to sell. It's still a sell. On the daily, it's a sell. It's just a question of whether that sell is an ABC sell. As you can see on the daily structure, we're going down. And every time they make an up move, it's a sell. Every time they make an up move, it's a sell. Every time they make an up move, it's a sell. And we have been selling this all along that way. And we've been selling it before, right? At some point here, we started to look for an upside. If you remember, we were buying, we were thinking that this structure here would go up. Remember, I said there is always that 5%, 10% chance they break to the downside. So once they broke to the downside and they broke out of this structure, we started looking for more downside. And at this point, I think this may have one more downside here and the structure before they go up. This one more down here may be the one that ends the structure. Right? So it's in a downtrend. And that is why we're thinking that they broke out of this. This was your corrective structure up. 1, 2, 3. They broke out of that correction and they're going sideways. The chances are they're going to go down. Now, they may break this top. Remember, we're trading within this little box, right? So they may break the top of that box, go up here, and then come down. That is okay. We've seen structure like these before they do. Then we will lose 0.5% at the top of that box. We don't have a stop higher than that. But if it goes from there To the bottom of the box is a 5-to-1 risk to reward, which means we're willing to do it. And just imagine if it breaks through the box and comes to retest this level. I don't even want to count how much you're gonna make, right? If we go and pull that down, you will have an idea. Let me just go and pull it down. And it could break out of that box. If you pull this down to the bottom here, I don't even want to count what's the risk to reward. We're not even playing with that until it gets to the bottom of the box, right? So that is the kind of trade, and that is the reason we are taking it, not for the 5-to-1. We're taking it. The reason we're willing to take that small trade is that if it breaks this box, we're going to add more trades onto that, but we will already be in a trade that is 2.5% up on our account and still going to almost 25-to-1. Those trades I will take every single day I see one like that. Win it or lose it, I don't care. Every time I would lose 0.5. When I win, it's 5-to-1, 20-to-1. I would take those trades every single time I see one. I would care less whether I win it or lose it. In this case, I'm willing to lose it because I know that it could go. But if it does what I think it is going to do, it will be an amazing trade, right? Now you can wait for it you can do two things. You can wait for confirmation. That is, you wait for it to go up, turn, and then sell the breakout. This is a safe to trade. Is a much safer trade, but you would get less risk to reward to the bottom here and then to the break. And sometimes you may not get the trade because what they do happen is when they hit that top, they're going to reverse so fast. Here is a good example. See this red candle here? You will not have an opportunity to get in the trade. Look at this red candle here. See that wick there and then this red candle? You don't have an opportunity to get in the trade. If they do that here, we will miss the trade. So rather than miss the trade, we're putting an entry order. Just giving you guys an example of how and what we do in our trading room. A lot of you are asking questions. This was in the webinar, not the trading room, right? The webinars, what we do in there. We discuss patterns, we discuss trades, we show an example of what we're looking for, and then we trade. Which pairs are more profitable? Depends which pair you trade. That pair and you win the trade, that is a profitable one. But we don't count trades as profitable. We count the patterns that we look for that give us good risk to rewards. Right? It could be in any pair. You will find them. But if you ask me the best pair so far that has made me the most money, it's Euro. And that was an NFP, non-farm payroll trade. We took the trade about a week before the non-farm payroll, and I just kept it true because it was good. And it was still going to go in the same direction. Okay, let's go. I'm not going to go through everyone because we're not going to finish. Let's look at silver and gold. I've gone through the majors. They will give you a very good example of what the others are going to do. So silver, I mean, this is easy. Silver is really easy to trade. I don't know why. Because we've been looking at the structure and, it's been forecasting very nice for us. We know where it's going to go. We look at it. At this point, we are waiting for a deeper correction. We're waiting for a correction to break this structure first and then go back up. We will be in that. The sells here has not been very great, so I'm not selling it. I'm waiting for buy opportunities somewhere around the 618, 786, right? This fib may not be valid after a time, but that's a whole different story. So watch for this. If it comes back here as a flag, we will get a sell support. We'll take the sell because that should be a sharp move to the downside as a C wave. Right? We'll look at it. We've completed the 5-wave. I think it's a leading diagonal structure, which means we will see a bigger correction here. You may see deeper corrections in this area, and then you're going to see this big move up. Don't miss that one as well. Right? It will take a long time. It's not going to go so fast. I'll tell you. That's why we're staying out, because it may take a very long time to happen. On gold, well, I don't see, as somebody said, gold is going crazy. I don't see any crazy stuff in gold here right now. This was probably going crazy. This one probably I could call going crazy. This is just a little candle there. It's not going anywhere. You have to, when you think the chart is going crazy for you, you have to zoom out. Go to the higher time frame, and you're going to relax your nerves a little and look at structure and say, oh, now I see what it's doing, right? Well, we have been talking about this as corrective structure. Remember this whole corrective structure here for another impulse. We're in another corrective structure here again, right? I think I posted this, that we're going to be in a corrective structure here for a while. And then we're going to look for upside. This one may or may not break out of this trend, right? It may stay within the trend and give us one more up. But you can look for that one more up when it breaks here, right? That one more up, you'll have to wait for the breakout before you take it, right? If you were in the sell, some of my traders in the sell, I hope you took a break-even trade or you took some profit because you were warned. We did this and I said, just be careful at any point, that sell, at any point it could go back up. So at least if you have it at break-even, you take break-even or you take some profit off and watch it, because it's corrective in nature, and that means we don't know what structure it's going to make completely until the correction is totally over. As of now, once it's in a correction, you really don't want to trade them. You want to be very careful, because these structures could, you don't know what this consolidation would look like until it's complete. You can make assumptions as to what it will be based on what you have, but very often it could change. That is how corrective structures work, right? Oil, I think we're making correction. Look for some upside here, some upside. We're looking for one more impulse up here, at least this impulse to go somewhere here, not breaking the top and either reversing, right, or just going through top. At this point, we'll be very careful. We'll move to positive. Move your stops to positive. Natural gas breaking out. This one is amazing too. We've been following it very nice, right? And there are buys here, there are buys along the way. With this, we're making a correction. I think you can see where this is going to go, right? You can see that this is likely going to continue to go up. But what you want to be careful of is whether this correction is complete, right? Let me put it in the daily so we can see that. That correction may not be complete as yet. See that? You want to wait for this to show you completion and then start to go up. Otherwise, you may get one more down and then the upside. Right? Very easy. Once you see this, you're looking for that. But remember, it's not about the two lines that are on it. It's about what type of structure we're looking for, right? So if you're just going to put those two lines and you think you got it correct, you may have surprises, right? This structure could change. And if the structure starts to change, your line will have to change, which means you must know what the structures look like. Wave 5 in oil? No, that's not a wave 5 in oil. I don't know which part of it you're talking about, but none of those have anything to do with wave 5. Because this is just one wave up. This whole thing here is one wave up. So there can be a wave 5, no matter how you count it. Anything else that would be incorrect, right? You can make, people like to make 5 waves in it, but it's not. And that's the problem with Elliott wave. The idea that a lot of people just put the count wherever they want to put it. We look at all the structures. Every single bit, the entire chart moves on wave structures. So we look at every single structure that we know exists. Those are the structures we look for, and there is one of them. The chart is always making a structure we know. That's why we study it, right? On copper, I don't even have the copper chart on, so we'll not go. I better take questions on anything else that you guys would want, not on specific charts, because on specific charts is not good. And I think some of you may want to know about the webinar, the course I'm going to do, which is starting on the 5th. I've had a lot of questions while I was on holiday about the course. Let me see. We can take questions now. Can you talk? Could you please check the pound? I think we just did. How much for the trading room? 1 second, we'll come to that. Interesting structure over Elliott. Oh, there isn't anything like structure over Elliott. What Elliott was teaching people was structure, was wave patterns. They named it Elliott wave patterns after him because he was teaching Elliott wave. He was teaching wave structure, right? What we're doing is teaching the very same wave structure, but with an ability to identify a single wave, something Elliott never did. He never actually left us with how to identify a wave within the structure. And that is why traders put the wave wherever they feel like, all over the places. So if you have 10 Elliott wavers who read the book, understand the concept, and they will go to label, they're going to have 10 different wave count because they don't know where the one wave ends or where the one wave starts, right? So they're going to put it wherever they feel like putting it. What we did was we actually took that work and I put it one step forward. Is I've managed to find a way to identify a wave. And once you can identify a wave, it is easy to count 3 waves or 5 waves, right? where it is good to, too many questions coming and I'm missing them. Can you show an example where it is good to add? You add after every correction if you know how to do that. That's easy. Pang Yen, please. We did that. We'll probably look at the Pang Yen later. What's your opinion about scaling in? I think you mean scaling in. I don't really scale in as such. Every trade is an individual trade. Let me make this very clear. I don't scale. Excuse me. I don't scale in. I don't scale out. If I scale out, if I take out part of my trade, I'm messing with my risk to reward. I think that's a good question. I'll take a second on that question. If you guys could hold your questions now, let me talk about that. If you're taking a trade here and this was your stop and that's your reward, and you said, okay, I have a 3-to-1 risk to reward, so you risk $100, and this trade goes up a little, it comes back here a little, and what you do is you take off half of the trade. You've just messed with that risk to reward. And if you keep messing with your risk to reward, your account is going to go the opposite direction. Because every time you win, you're winning less than you expect to win. But every time you lose, you're losing the entire amount you expect to lose. So you're not going to grow. You're going to go the opposite direction, right? So what I would do instead of scaling out is I would put it to break even. Let it take me out for break even. I'm willing to live with that. That was, if the trade doesn't go to where I want it to go, then the trade is not working. Then my analysis is wrong. It's not doing what I expect it to do, and I'm willing to take a break-even trade for that. Great. Rather than take out a part and feel like I'm a winner, you would take out a part. Here's what will happen. I would count that as a break-even trade that didn't work. You're going to count it as a trade that worked because you won, I don't know, you took out 0.5% and you won 0.5, but you did the other 0.5%, you got break-even, or you even lose it because you didn't put it to break-even, right? That, I don't do that because that it doesn't look like it's serious to me because I'm cutting on my profit every time the trade goes to where it should go. I'll rather accept that the trade is wrong and that's it. Let it go, right? I can accept it. You can live with that. Break even, let it go. Next trade. Just move on, right? And that is normal. I think that is the right way to do. Scaling in is just to make you feel comfortable. Scaling out, sorry, is to make you feel nice inside that, oh, I took some profit out of that. I had 100 pip and I took 50, I took half of it off of the 100 pip, the next half would have run. Well, it's amateurish, if you ask me. I'm not trading to be a winner. I'm trading to make money. And if I'm going to make money, I'll make money. If I lose the trade, I lose the trade. So be it. Right? I'm not trying to prove that I'm a winner in this game. It's not a winner mentality. It's a business mentality. If you're trading to be a winner, great. You can scale out and be happy about every trade that you get 5 pips out of. I think it's a bad idea. That's just me. That's my understanding of it. I think it's a bad idea, right? Scaling out and scaling in, on the other hand, I don't know what that means, because when I said add a new trade, I'm completing every single trade is an individual trade for me. I don't think if I'm trading the same impulse going up and I add 5 trades, so each 5 trade has its own risk to reward, right? Each one has its own risk to reward. So I really do not count them as scaling, and I count each one as an individual trade. Multiple take profit 1, 2, 3, 4, 5, 6. I don't know. You can do that if you want. I don't have that. You ever see any of my charts showing multiple trade take profit? It's either going to go to my target or it's not going to go, right? If it's not going, I'll take off the trade. If I think that the structure is changing, I'll either put it to break even or just completely take off the trade. That's it, right? There are times when I look at a trade, I'm in profit, and I say, oh, well, this is changing, guys. We want to close this trade. Move your stop very close and let it take you out. You hear me just said that, right? You will just, if you're in this trade, move your stop and let it take you out. I didn't say to the guys, oh, you probably have 20 pips there, grab it, right? I said to them, my traders, I said, okay, if you're in this trade and in this trade, move your stops to break even and leave it. That's it. That's how we work. Euro Oz for all, we'll come to that. Yes, we took one loss there. We'll come back to that. Did we do Aussie New Zealand? I don't think so. We'll look at that. You said you're gonna show us that how to make money with less pips. Oh, we can do that right now. So no, what we were talking about was risk to reward. So what traders does, by the way, scaling in and scaling out is part of that. You have an impulse, you got a correction, right? And most traders would do this. Let me make it simpler so you can see. Let's say we have an impulse, we have a 1, 2, 3 correction. And all of us are going to make an assumption that this is going to go up, right? Let's assume we're all going to make that assumption that that thing will go up from there, right? Yellen will speak in 3 minutes. Well, we will see some reaction and we'll all watch it. Nothing to do there. I'm not going to trade the reactions right now in the webinar. We'll watch it. So let's say we all make an assumption that this is going to go up. So this was your, I would say trade the breakout. If you look at my chart, I'll say trade the breakout. If a trader is trading advanced pattern, and he could be very nice in this one, he would say buy here. But here is the problem with buying here. If you buy here, you have to put a stop that will go beyond the low. Beyond the low will make, let's say this is the target, and the target will be pretty much for all. Sometimes the advanced people put their target here, but I like to put my target where I think the impulse is going to end. So this would be my target. This would be their target. It looks like a lot of pips, right? Until you start counting the risk to reward, because this is what the risk to reward would show you. This is where, this is where their stop is. Their target will be from here. So this would be your stop, and this would be your results. When it breaks out here, my stop is going to be somewhere here. This would be my stop, and this would be my reward. So although I'm making less pips on that trade, and when I said my stop is going to be there, I don't mean automatically I'll put a small stop. Structurally, that is where my stop should be. If you understand how we trade structure, both of those trades is where I would put my stop if I'm taking those trades. If I'm buying the bottom, the right place to put my stop would be here, because only here the structure will change. If I'm buying the breakout, the right place to put my stop would be here based on the structure I'm trading, and that is where, if I'm wrong, I'll be out of the trade. And now is a nice time to show you an example of that on the EURUSD. So let's go to the EURUSD. You see, much less pips, but much higher risk to reward. So in terms of that, I make a lot more money, right? And I have confirmation that the trade is going to go in my direction. I have better risk to reward, because when you're trading this, when you're hoping that this is the bottom, how many of those trades they get taken out before it goes up? Go count it. Look at any advanced pattern traders, take 100 of his trades and check it. I like to wait for confirmation. Breakout gives me confirmation. Even when you're wrong, it's less. So let's go to the EURUSD for that trade. This is the trade we lost, and then you will see what I mean by it. So we will go to the 1 hour. We're talking about this little piece in here, yeah, this little piece here. So this was the breakout trade. This was, we were looking at this flag. And here was it. Your stop should be here. Your entry should be there. Your target was way at the top there. At least first target would be the trend line. The second target will be the breakout. Well, first target, I mean not by in terms of where I'll take profit. The first place where I'll start moving my stops is if it hit the trend line. The second, what we were expecting the next impulse to do is make a correction here and continue to go, right? That's what I mean when I said second place. So the first place, I'll be serious about doing anything in that trade is when I hit the trend line. So I say, put your stop and take your loss, right? Some people kept the trade. It's a bad idea, but they kept the trade and went back, and then they took a break even out of it. But that's a bad idea, because you should not do that here. If you were trading when this spike happened and you moved that to break even, well, that is okay. That's a better idea, because I think you had 20 something or plus pips, but I wouldn't have moved mine to break even, because I don't move it to 20 pips to break even. So this is a good example of where, if you're trading, if you were pulling this, now I still think that is going to go up. Let me just get this. I still think this pattern will go up. We're just looking at a bigger correction because the structure looks like this, right? So we're still waiting for confirmation to buy. And this is going to be much better confirmation, because I think we're going to break out of the trend line. And that one is going to go up crazily. Okay, so let's see. We saw the reversal in the New Zealand, right? We saw a reversal in New Zealand. See what I said? Be careful, New Zealand is going to reverse. Reversal in the New Zealand. See that? That's the amazing power of structure. Reversal in the New Zealand, reversal in the Aussie. Reversal, watch the Aussie for a breakout. Euro downside, still within this structure. Downside, still within the structure. It's not breaking out of that structure. Be careful of sells in euro. Euro could actually start going up back. Yen, I think, goes which way? Yen go up, breaking the structure. So you're looking for a bigger C wave pattern to the top there, a bigger impulse. If you get a buy in this, be careful, because once they break this top, it could stop going. CAD, let's see what CAD. We stayed out of CAD. It's not breaking anything. Swiss, we stayed out of Swiss. It's breaking to the upside. That is good confirmation for us now. We can go back to the bigger time frame. And you can trade this when you get a trade set up. Not now. I don't think you should do it now. Wait. This would be a good trade. Right? It's confirming. You wanted to confirm that trade, not on one candle. Right? Wait for it. I can't tell you how we would do it, but basically my traders know what to do. Wait for it. Wait for confirmation and then take that trade. So basically, what else? Somebody said gold was going crazy. Let's go take a look. Come on, guys. One guy said it was going up, it was going crazy. One guy said it's going down, it's going crazy. It's not going anywhere. It's still, it just went up and came back to where it is. You guys are, Pung New Zealand is going crazy. Let's go look at it. You guys got to be careful with those words, crazy, right? I think we're getting some really big moves. Pung New Zealand, no, it's not going anywhere. Actually, Pung New Zealand is upside, right? Remember what I said? Look at this structure. Even if it comes down, it's going up. See what happened? What they did. You guys are seeing structure playing out live here right now. Even though there is a big news event, it came down and you're looking for the upside of this. This is the structure we're looking for. We're looking for this trade and then maybe higher, right? Not the trade to the downside. The trade to the downside is not interested to us because we're in this pattern and this pattern tells us it will go up eventually. Nothing crazy is happening there. Don't worry. Pang Oz, the Aussie move, Pang Oz should move. Nothing interesting here. Wait for this to form a very nice consolidation before you trade it. The breakout is a possible trade, but don't take this breakout as yet. It's a little too early. This thing will consolidate much more. It may end up like the Euro Oz. It may come here and come back down. You have to have a bigger time-wise consolidation, right? So yeah, but most of those movements you can't actually trade. Somebody said by crazy we mean great movement. Great movements are the one you can actually trade. You can't trade unpredictable movements. Well, not totally unpredictable because we anticipated the downside on both this and this, right? And it happened. It's not totally unpredictable, just that you can't trade it. I don't think you should. And if you're trying to trade that, it's reversing already. I don't think you should trade it, right? There isn't a setup to trade that. At least I don't have a strategy to trade that. How can you merge advanced patterns with wave analysis? You don't need to merge it. That's a good question. You don't need to merge it. Once you learn wave theory and you understand wave, you don't need to merge it with anything, right? Advanced pattern is just a simpler way of looking at wave structure. Aussie, New Zealand. Somebody wants Aussie, New Zealand, and then we'll take one or two more questions and we'll call it a day. Because too many questions. That's it. Aussie, New Zealand, look for a buy setup. When it breaks this, look for a buy setup to the upside. Let me see. Pung trade, I don't even trade that. I think you may have asked me that question, but I don't trade it, so there's no use to. Euro Brexit impulse, please. Euro Brexit impulse. I'm not sure what you mean by that. You want me to show that happened way back? That's way back. That's Pung USD. I already did that. You'll watch the recording. The Euro USD chart we looked at, it's not, it's still in a big correction way before the Brexit, right? The Euro USD is in a correction way before Brexit or anything else, right? It's in this huge correction, and that was way before any Brexit start, right? It's in that big corrective structure, so Brexit had very little to do with that, right? Doesn't have anything much to do with that. That thing is in its own structure, all the same. Yeah, but a 4-hour chart doesn't determine what the biggest structure is, right? No, it's already breaking out of that. You're talking about a correction of this. They already broke that structure. If that is what you're talking about, I think they already broke out. Look for the upside still. Still, as long as it hasn't come back into that structure, I'm still looking for upside. As long as this does not come back into this structure, I'm still looking for upside. So it's nothing new there, right? And the question is, would you have sold this before the news event? No, because you don't know that it's not going to go up or down. You can make an assumption that yes, that is what I would have done because my strategy or something said to do, but it's pretty risky to do, right? The only thing you could have probably done was on the Aussie, put an entry order under here, and you're not taking in that entry order. So what you should do now is take the entry order off because it didn't go the way you wanted to go. We were talking about if this thing was going to blow through the bottom. If it was going to blow through this bottom, then you put an entry order here, would be a perfect trade. That didn't happen, so just call it off, right? Okay, let me see. Somebody repeat the question. Let me see. Technical questions. You might recognize this code. I like you speaking. The single most important rule that can be gleaned from a study of various corrective patterns is that corrections are never fives. Rod, no, that's not true. Read the book again. Next one. I'm not going to even explain it to you. Read the book again. Next one. Technical questions you might recognize from the, I'll speak the single most important rule. You still repeat the question. That's incorrect question. You don't know. If you don't know that you can have a 5-wave corrective structure, you know nothing about wave theory, period. And I'm talking about Elliott wave theory. I'm not just talking about wave theory. I wouldn't even go to explain it. Read the book again until you learn that. Which book? The Elliott wave principles. Thank you. Somebody just posted for you. Have you heard of the triple tree? If you haven't, then you don't know anything about wave trading. Sorry about that, right? It sounded a bit rude, but that's the fact. Guys, let me be honest, you don't even try to discuss wave theory with me. Don't even try to do that. You're way not there as yet. I'm not boasting, I'm telling you the fact. Don't even try to come close discussing wave theory with me. Because this is something you wake me up in the middle of the night and I'll give you the whole story, right? You're not there to even discuss it with me. You notice I don't discuss wave theory with anybody in TradingView. I haven't seen somebody who I can discuss it with there as yet. Sorry about that. That's just a fact, right? It's just not there. One guy called himself the Elliott wave something specialist, came once and was trying to discuss Aussie with me, and I showed him he's counting a 3-wave pattern as a 5-wave pattern, and I showed him, draw it, put it in front of his face, and he just flared up and started trolling all my charts, basically. Right? It's not somewhere I'll go. We will not discuss that. That's not something we can discuss. Which edition you can read? You can actually read the. I read the one that is written by Proctor, and you can get it on elliottwave.com for free. But remember, like I said, the book is, they took what any edition you want is what they will do is they will take the work of Elliott and they will put it in a book, and then they will add something of their own onto it. What I did was ignore a lot of what they add on as their own. Most of what you're going to take is the substance of what Elliott actually taught. And Elliott's work is incomplete. It's not totally completed. Remember that Elliott never identified what is a wave for us. And I think people in the future will make it much and much better. What we've managed to do is we've managed to add on a very simple way of identifying what is a wave. And we have tested it for more than 3 years now, and it's working amazing. That is why if you look at my charts, you're going to see some amazing results. It's not because of me being a very super trader. It's because the methodology that I'm using to analyze the chart is working great. It's that simple. It has to do more with the methodology than with me. So for those of you who are interested in the course, I'll go right into that right now for you guys, give you a very fast review of what is the course of. So this is what the course is actually. Let me start, I'll draw. First, we have a group. We have a Slack group where you can get all information about what we do, where our webinars, the course, the codes for the webinar, everything is in that group, right? That is where we do all our discussions, where we do our webinars, where we do our trading. Everything is done in that group, right? Now, if you want to know about the course, what you will do is you will add me to Skype. Let me type my Skype name here. MANGAL 457. That should be 457, right? You add me to Skype, and I will give you the information about the course. It's very simple. The course is not expensive, and it's a 6 weeks course, which means for the first week, I'm going to do theory only. Theory, and then after that, you have 2 weeks of practice, and then you have 1 week of theory, and then 2 weeks of practice. That's a 6 weeks training course. Now, your training doesn't end there. You have lifetime access in our group. You remain with us for the rest of your life absolutely free. You don't have to pay a single cent for the rest of your life to learn anything, anywhere. So that means if you have a question on anything we do, or anything you heard outside, or anything you would like to test, or anything you want to know about trading, you have an entire group of professional traders, over 200 plus, almost 300 professional traders in a group that are trading together, where you can ask your question and you will get an answer to it. You want to discuss something, we will discuss it. You want to discuss support and resistance, let's go discuss it. You want to discuss pin bars, let's discuss it. Anything you want to know about trading, you don't have to pay for it anymore. You just come to us and we will deal with it. And for the rest of your period that you're with us, we will try to make you a successful trader, which means it will take you some time to learn this stuff, to master it, and everybody does that in their own pace. So whenever you have a problem, there are traders in the room who will help you. If you're trading and you're having difficulty in your trading, we're all there to help you. You can actually do a one-on-one with me, and I'll review every single one of your trade. And then we will see where you're making mistakes and where you need to correct it. Right? That's what we do. And we are here to help everybody who is in our group. We do that on a daily basis. I also do 2 daily updates on the charts, which means twice a day, I'm updating the very same charts I'm posting on TradingView, as well as much more. Every single one of these charts that you see on that list, we update them twice daily. So you were with me twice daily when I'm telling you what I think the chart is going to do. I don't think you get that anywhere else in the world. Nobody does that for you. No, I can't suggest a broker. I have no idea. You know how many brokers call me to be IBs? Only today I refuse IBs from 2 brokers. I can't call their name, but 2 brokers. I refuse IBs. I get that call every single day, 2, 3, 2, 3 brokers write me, then I'll answer them. Maybe a week, 1 or 2. Some broker called me like 6 times already to be their IBs. They look at my list, they see 15,000, 17,000 followers, and they said, oh, we want you to be our IB. I was like, no, thank you, I'm not interested. Yes, it can work on any charts. So you Skype me and we can even talk. I spoke to 2 or 3 people yesterday already about the course. We will talk. If you have any questions you have about it, that's the easiest way to do it. And remember, the most important thing for you to know is that you're with us for the rest of your life. You're not going, we're not telling you, okay, buy these couple of videos and go away. We don't want to see you because we're not going to answer your questions. Whatever we teach you, we're going to keep you here to see that it works. That is why we can keep you, because whatever we're doing is working. That's why we can keep you. You know why most trainers don't want you to stick around? They sell you some videos for $400 and they said, okay, that's it. You have 1 or 2 questions you can ask and don't come back, because whatever they're going to teach you does not work. You know why people like to sell signals? So that you don't bother them. They don't want you around them. You know why they sell signals? Because when you sell signals, you count a lot of profit. But in reality, most of those are not even profit. Yes, the trading room is free. The 2 webinars are free, but first you have to complete the course. Because if you don't complete the course, you don't know our methodology, you don't know our strategy, you don't know how we trade, you don't understand wave theory. What are you going to do in the trading room? It's not a signal service room. It's a trading room. Non-FX charts too, yes, you can discuss. We have traders who trades in indices and all the different things, ETFs and all of that. Traders trade a lot of different things in our group. You can discuss with them. Yeah, we have Chinese students. A lot of them, I think we have more than 4 Chinese students or 5. We have a lot of students from Singapore itself. Some are Chinese speaking from Singapore. Nope, I can't open the trading. I just explained why, because what we do in there, what we discuss in there is not something we will discuss in an open webinar. If you can take the course, if you're not a full-time trader, if you trade part-time, the only difference between a trader who trades daily and a trader who trades part-time is the time frame they're trading. You can do that without even joining my course. You just need to change to the higher time frame. Trade the daily chart or the 240 charts. You can't trade a 15-minute chart if you're a part-time trader. Well, you should explain to me what you mean by a part-time. If you want to trade 2 hours every day and then stop trading, well, then you have to trade a 5-minute chart. If you want to put on trades and leave it to run for days because you are not in front of the chart the whole day, but you would like to be in trades, then you trade long-term, position trading. It's just different type of trading. Gold is now moving. Well, look at it. Nothing moves very much. You remember what I said about the yen? If it goes up, it's still going to come down. Let me show you the magic of wave theory. You guys are going to see it live. Remember what I said? If that yen goes up, be careful. It is still a correction, right? And you got to watch it. Once it comes close to this top, it's going to go back down. That is the magic of wave theory. Now we've got the different structure that we can look at as an ABC structure. See that? Now you want confirmation of the breakout. Don't sell the breakout as yet. Amazing, right? It's amazing. You can tell what these charts are going to do, whether there's a news event or not. The break to the upside will just be short term. It is going to be a corrective structure. The biggest structure is to the downside. The impulse is still to the downside. Now, I could have done this to you guys, which most traders would do, is they would say, okay, here's a deal. Buy this breakout here, and they would go and say, oh, well, why didn't you get it? We just made 20 pips out of that, right? How much did this thing move? Signal service people will do this. Oh, that thing moved 40 pips. You should have actually taken your profit off. No, you wouldn't have taken your profit off. If you took that buy, you're probably crying right now if you don't have a stop, right? Because it may just kept going down and down all the time, right? Just be careful. This, if you put it immediately to break even, you would have a break even trade, and that is good. If you didn't move it immediately to break even, you're wondering what happened, right? Well, nothing happened. That is what we were expecting it to do. Go up and then come back, because the upside is still part of a corrective structure. The impulse is to the downside. See? That's how wave works. That's how wave theory works. It's not about putting a line in the chart. It's about understanding what the chart should do. And that's what we teach you. So I think that's enough. I want to thank all of you for coming. You guys have a wonderful weekend, everybody. Enjoy your weekend, right? And see all of you. Those of you who want to take the course, you may want to call me so that you can pay early, because on the 5th, we're starting. We're almost filled. Let me just say that we're almost filled. I think yesterday I had about 17 more people who are paying right now. Those are the people who wanted to take the course while I was away, right? Some of you already paid. I had 3 people to the group today, so their money came in already. That's why they were added. So, you know, there may be some lots still remaining, spots still remaining. I think there are about a couple spots remaining. So if you're interested, buzz me and you will get it. Take care, everybody. Thank you. Bye-bye.